Welcome back to Built for This. I'm your host, Bailey Kramer, real estate investor, entrepreneur, and someone who believes success is about more than just numbers. On this show, we talk about business, fitness, and the mindset it takes to build a life you're proud of. Because if you want to win in the long term, you've got to be built for this. Let's get into it. Today's episode is one I've been really looking forward to because we're tackling one of the most overlooked and misunderstood parts of real estate investing, and that is insurance. When I say misunderstood, part and overlooked, that's including myself. I feel a lot of investors overlook it, including myself. So this is also a good one for me as well. So if you guys own rental properties, whether it's short-term, mid-term, or long-term, understanding the right kind of coverage isn't just a box to check. It's the difference between getting paid out or getting denied when something goes wrong. And to help us break this down, I am joined by Lindsay Ortiz from Steadily, which is one of the top landlord-focused insurance providers in the country. And it's a company that I use to insure all of my real estate. So welcome to the show, Lindsay.
Glad to be here. Thank you.
I'm excited to have you on. I know we've talked a little bit before this to basically make sure that we can provide as much to the listeners as possible with all things insurance. So before we jump into all the nitty gritty and all the most commonly asked questions that me and all the other investors have, if you can just give us a quick brief on who you are and who Steadily is.
Absolutely. So I'm Lindsay Ortiz. I've been with Steadily for almost 2 years now. And Steadily Insurance is landlord insurance. We work primarily with landlord investors throughout every stage, whether it is, short-term, mid-term, long-term, or even renovating property to rent or sell. So that's what Steadily is.
Cool. And you mentioned a big buzzword that I want to jump right into it, which is landlord insurance. So what is landlord insurance and how does that differ from just typical homeowners insurance that people are used to?
Yeah, perfect question. So I will say this is probably one of the biggest misconceptions, that I have seen from going from a company that offers both home and landlord insurance to strictly focusing on landlord. One keyword between the two that differentiates is occupancy. Okay. Homeowners is for when somebody lives in the home, they own the home and reside in it. And landlord insurance is when you own the home and you rent it out. So it's not your primary residence.
Okay, cool. So pretty, I guess, basic on the surface. Now, what are some of the differences, the two different types of insurance? So like, for example, for landlord insurance, what are some key things that a policy has in there versus a normal homeowner's policy?
So if you are to look at both side by side, okay, especially if you're not used to dealing with insurance every day and, reading contracts and knowing what that complex verbiage means, they look pretty similar, right? We've got coverage for the dwelling itself. We've got liability coverage. We've got, on a homeowner's policy, we've got loss of use, whereas on a landlord policy, we've got loss of rent. So, they're similar and tailored, to each specific situation. I would say that something specific that you may not have on a homeowner's policy that you do on a landlord is like vandalism and malicious mischief coverage. Homeowners policies typically have a lot more coverage for your personal belongings, right? Whereas on a landlord policy, unless it's rented out short term, it's pretty minimal coverage. And liability is a big thing too. While included on both policies, you do have more of a risk tolerance when you are renting out a home. So I'd say those are the key things there.
Got it. Makes sense. Yeah. The biggest thing whenever I get a new insurance policy, because that's the main time I'm looking at it, is when I receive loss of rent, I'm like, knock on wood, I haven't had to use or file any claims yet, knock on wood. But yeah, the loss of rent is something that I guess makes me feel pretty good about having just insurance in general, but obviously specific to like a landlord policy, because if something goes wrong and my house isn't usable for, a period of time, having that loss of rent is, insurance is kind of supposed to be a safety blanket, but making sure that not only your house is going to get rebuilt or whatever the issue was, then you're also going to get paid rent on top of it as if it were occupied is pretty sweet.
Exactly. So it just overall protects that investment.
Totally. So with the landlord policy, we have all different types of landlords that tune in to this channel, including myself. I do short-term rentals. I do mid-term rentals. I've done long-term rentals in the past, but I don't do too many of those right now. But if you can break down, like, are there differences in a policy when someone's getting it through Steadily or really anybody? Is there a difference on the strategy that they're actually doing?
So the biggest, it's still the same policy form. Okay. It's still
Okay.
written on the same type of contract. What differentiates the two, well, I know it's three. So we categorize midterm as anything 6 months and less, short term, anything 3 months, and less or greater than, 30 days. It's an endorsement that's added to the policy. So once that, let's say it is a short term rental, there's an application question that asks, is it going to be rented out for on a short term basis? We include that and then adjust coverages to meet your needs, right? So as I mentioned earlier, someone that has a long term rental and it's not furnished, may have some appliances and maybe could get away with $5,000 in personal property coverage, right? Where someone with a midterm or short-term rental that does have a furnished property, we're going to need to, increase that coverage or, adjust, things as needed. But it is the same policy form.
Got it. And if someone's doing, let's just say, a hybrid of short-term and midterm, maybe they go from having a 3-month renter and then a 1-week renter and then maybe a 6-month renter and then back to a couple day stay. What's kind of best advised for them when they're getting the policy? Is it technically classified as more of the shorter stay, or since it's a hybrid, is it longer stay? 'Cause I know that seems very, nuanced, I guess, but for me, and a lot of investors, that happens quite a bit.
And it's a good question. I would say from an insurance standpoint, we want to rate for both. With that being said, we do want to include that short-term rental endorsement so that you don't have to call us once a month and say, hey, I'm renting, it doesn't work like that. So we'd want to rate for both, especially if the property is listed on like Airbnb and Furnished Finders. At the same time, we'd want to rate it appropriately as a short-term rental as well.
Got it. Okay. Now, maybe a selfish question again. These are questions that I'm sure a lot of people have.
Yeah.
But I mentioned like loss of rent before. So when us Airbnb hosts or midterm rental, we're the type of people that we get way above the average market rent. So for example, if I have a property right now, this is a real scenario where the market rent for a long-term rental is $1,200.
Okay.
I use it as a midterm rental / Airbnb, and I get $3,500 per month. Like consistently, I've been doing it for this specific property, I think 2 years now, coming up on 2 years, actually in April. Yeah. So I have all the documentation to show I'm getting $3,500 a month. Now, my question is, I'm getting my policy and I put in there for the loss of rent, let's just say $3,500 times 12, which is, I'm not even going to try to do math right now. 3,500 times $42,000 a year.
Mm-hmm.
If I put $42,000 a year on that policy, and I can truly show that I'm earning $42,000 per year from that rental, even though it's like a lot, 3 times more than the average market rent for a long-term rental, is that still like doable for a policy like this?
Good question. So think of it this way. Our goal, anytime you are to file a claim, is to make sure that we are restoring you and your property to exactly where it was before the loss. Okay. So if that is what you are able to rent it out for, and that is the loss of rent that you are incurring and can prove that, provide it, to a claims adjuster, then that's the amount that you would get.
Got it. Okay.
Mhm.
Pretty cool.
Yeah.
Okay. Awesome.
Good question.
And then the other part of the policy that you mentioned was kind of the big differentiator, or one of the big differentiators between a landlord policy and a homeowner's policy, the like personal property coverage as well, especially when we're furnishing these rentals. We're paying obviously for all the furniture up front to furnish the unit, TVs, the appliances, all that fun stuff. So just wanted to highlight that obviously if you structure it properly and you include the things, that will also be in there. Now, as far as the claims process for those specific items, let's say a house, knock on wood, catches fire and you lose all your furniture, for example. Well, you lose more than that, but furniture included. What would be kind of best tips or practices to make sure that we get all of the money or the maximum value for our personal items, like furniture and appliances.
Say receipt. I know a lot of times it's easier said than done, you know. However, in the world we live in today, a lot of purchases are made online and we get emailed receipts. And I'll tell you a personal story. I had gone to a wedding in South Carolina last year and had taken a little travel case with all my jewelry. Okay. And this is a jewelry policy. This is, just to give an example. And I left it at the resort. Okay. My real diamond earrings that were actually gifted to me, things that I've collected, throughout the years. And I was able to search in my email and, find receipts from years and years ago, provide photos of me wearing certain pieces of jewelry. I always encourage my clients, because it is hard and you never expect or anticipate a loss to happen, right? I always encourage my clients, once a year, go through and take a video of your home. Like, go take some photos of every room. So at least you have that. Something unique, though, that just popped into my head, when you're listing these properties for like short-term rent, right? The listing photos do show a lot of your personal belongings as well. So that does help too. You've got photos of that stuff, but to maximize, and make sure that you do get everything back, I'd say just, keep a folder of updated pictures and revisit that once a year.
I love that. Something that, again, I need to do a better job of is just like documents and everything, because I have all my orders online. So
Yeah.
in a worst case scenario, I would be able to pull those things up. But I do have individual Google Drive folders for all my properties with like pictures, at least like the
Smart.
professional pictures. And then whenever I rehab a property, I need to do a better job at this too, though. I have a list of all of the like things I'm ordering for whether it's like a bathtub, vanity, all that
Right.
stuff. I don't have that going, but yeah, I think getting my furniture and all those things buttoned up would help a ton in a worst case scenario for sure.
I'm not perfect at it either. And I'm conscious of it, really am. I could be better myself, but it's hard. We accumulate so much stuff over time, but yes, it is important.
Totally. Cool. So next I want to talk about what sets Steadily apart from the competition. Obviously, I have some personal reasons why I use Steadily that I'll kind of chime in on, but want to turn over to you first and just kind of hear what makes Steadily different from other companies.
So Steadily was actually founded by landlord and property investors themselves who went through frustrations in the insurance process for rental properties. And so that's where Steadily was born. Okay. And we have made it our mission to become the fastest affordable landlord insurance company in the country. And, what sets us apart is a lot of insurance companies will offer multiple products, the auto, home, like I was talking about, jewelry, landlord, boat, we wanted to eliminate all of those distractions and master one specific area, which is landlord insurance. All of our agents, that's who we work with. We do landlord insurance. We work with property investors all day long. We know what's needed. We know what type of policy. We know the policy contracts like the back of our hand. So that's what sets us.
Very cool. And I want to ask you one more specific Steadily kind of question, then I'll chime in with my experience too. Because although I am technically a brand ambassador and I have the affiliate link, I do use Steadily. And I've used them as recent as a week ago when I had to update a policy. So I'm an active Steadily user nonetheless. But I want you to talk about kind of the tech side of it, because I think that's a huge differentiator. And one thing that I really like with getting a quote really fast and being able to execute on the quote fast is cool, but also being able to get the quote is really fast. So if you want to talk about that process.
Yeah. So we are an insurtech company. Okay. And we obsess over our interface and our, convenience of clients being able to go online, get a quote, bind themselves, service policies, make adjustments if needed. We understand how busy landlord investors are and property owners that don't have all day to sit on a phone call on hold trying to get to a representative. So we've really, really focused on making our, website and quoting process and binding process online as easy and seamless as possible.
Totally. Yeah. And for those listeners who haven't tried it, you literally just go to the website, and you can use my affiliate link if you really want. And you literally just type in your address. It pretty much auto populates all the information that you possibly need. Sometimes you need to just like add one thing, but 99% of the time it has all the property details there automatically. Press a couple buttons, just like, you're going through any type of form, I guess. And it spits out a quote. And it's not just like a ballpark quote. It's like you can actually, like you said, bind the policy super fast. So that's one piece that I really like about it. The other thing that you guys do a really good job at is also customer service, because you mentioned, yes, landlords are busy, and it's so nice to use the online portal, just get a quote, or if it's just really straightforward, the online part is perfect. But there are times where, for example, I just closed on a property about a month ago, and I worked with a hard money lender. So the hard money lender has their own set of requirements that I need to fit. So it was really an easy process to just put my hard money lender, and whatever rep emailed me back after I got the quote. I sent them the guidelines of what the lender needed. And then they said, yep, we'll take care of it. They communicated through that email chain with the lender, got everything sorted out, and it was super easy. So that was one experience that I was happy with. And then another one is, I mean, we could talk about this too. Well, yeah, let's jump into this part too, and then it'll tie back here. But it's really when you're renovating the property. I think I was telling you about this before, but I renovated the property. So you need insurance when you're renovating the property, but it's a different, I'll let you say it better, but it's a different type of insurance. Can you kind of go into what it looks like for those investors who use either the fix and flip strategy or the fix and rent strategy? How does that insurance look and differ?
Yeah. So we've got our landlord insurance policies for tenant occupied rentals, right? Short, mid, and long term. But we also offer a fix and rent product and a fix and flip product. Now, the fix and rent, you buy a property, you're planning to renovate it and then rent it out. Whereas the fix and flip, buying it, renovating, and selling. So those are two different policy forms. The biggest thing, though, is that the occupancy is rated for a vacant property. Okay. If you were to just take out a landlord policy because you just purchased a home, you're going to rent it out in 8 or 9 months, but it's going to sit vacant while repairs are being made. That's an issue, that you don't have the right contract in place. The nice thing about our fix and flip, and I'll just say renovation policies in general, is we've already got all the information needed from you up front. All it takes is once renovations are done, you give us a call. And if you're renting it out, we switch the policy over. It's a less than 5-minute deal. If you sold the property, then we cancel it. You only pay for what you need. So it's really the seamless process to get everything switched over if you are going the rental route after renovations.
For sure. And that's what I ended up doing, like I said, like 2 weeks ago, where I bought it 4 weeks ago, furnished it, rehabbed it, the whole bit, and then rented it out. And then as soon as I got it rented out, I sent over an email to you guys and just said, hey, I got this rented out. I need to change up my policy. And they were super helpful. And it was very easy to just change it out. And if you can tell me this too, there is a price difference. Correct me if I'm wrong. For like, if a property is vacant versus if it's rented out. Is that fair to say?
Yes, very fair. I mean, I think if you just kind of zone out and look at the different risks that it, imposes, if you will, vacant homes, there's less control over the situation for like squatting, for people going and vandalizing the house. There's no one there to protect it, right? So yes, it does, present a higher risk, which is rated on the policy differently. But yes, I think that's your statement.
Okay, cool. Because I remember, again, using this one property as an example, my policy was a little bit higher, but then when I got it rented out and it was tenant occupied, it went down a pretty good amount, which was sweet. And the other thing too, just a tip for investors, when I first connected with a lender to refinance the property, a lot of times they want to know how much you're paying for insurance because they want to make sure that the property's going to cash flow and the numbers make sense. So I remember I initially told the lender the insurance amount, and this was the insurance amount when it was vacant. So it was higher, and they were like, "Oh, that seemed higher than typical." I'm like, "Yes, because it's vacant." And then I said, when I once I get it tenant occupied, it's going to go down. And I'm sure that's something you guys can help with. And also the online tool can help with, as far as giving a rough quote to what the new policy will look like once it's rented out.
Exactly.
But that's just something to keep in mind, and that it will go down after it is occupied. And that way you can work both scenarios into your numbers. Because my lender was like, "That's high." I'm like, "Yes, but this is the vacant policy, not the occupied policy." So just something to
And
mention
on
there.
that note too, when you are renovating a property, now if you buy something that, let's say, is older, has not, been updated, and you are going in there and, putting quartz countertops, marble flooring, chandeliers, and doing an extensive upgrade like that, then it may not go down as much. The nice
Right.
thing is, and something we're always willing to do for our clients, is give you an estimate, go through like, "Hey, what are you planning to update, these home characteristics to?" And I can give you a price point of what to expect rather than, not knowing. So that's something
Totally.
anyone can always ask the agent they're working with.
For sure. And insurance is one of those things where every property and every situation is case by case. So it's not like, everything's case by case.
Absolutely.
Well, but that's a disclaimer at the start of the podcast. If you haven't gotten this far, everything's case by case, which obviously every property is different. Makes total sense. What are some other ways that
Yes.
so I guess there's two different ways we can take it. But which way do I want to start is the question. So I'm talking about basically once you have a property and you do all the work up front to get the insurance policy, you lock it in. Landlord, all we're thinking about then is running our property and making sure we're making money. That's at least that's my first thought. And then every year, I get an email, "Your policy is going to renew." And I'm like, "Sweet, it's on auto pay. This is going to renew." That's great. What are some things though that landlords and myself could or should be doing, whether that's on a yearly basis or more frequently or less frequently, to make sure that our policies still make sense and we're still getting the best rate?
So I would say, and it's something no one wants to do. Okay. No one wants to sit there and read through insurance policy documents, especially if you do have a bunch of properties and, all of that. I get it. But there are things, every renewal, okay, things are going to be reevaluated, especially if you have like a replacement cost policy, right? Or there may be certain endorsements that are now offered that have been included that you may, not need, or you may. I always tell my clients, revisit it once a year, set aside 30 minutes, reach out to us. Let's make sure that coverages are still meeting your needs. Situations change. You could have different circumstances, a couple of years ago than you do now. So let's, thoroughly go through it, see if there's any new discounts that, we can apply to the policy. Let's see if there were any that you weren't taking advantage of that, have changed. So I'd definitely say set aside time once a year and just thoroughly review it to make sure that, it is the best policy for you and the best rate.
For sure. Yeah. Again, that's definitely something I need to do, because whenever I see the renewal email, I'm just like, great. I'm glad I'm still going to have insurance next year. And it's actually funny because I think there's so many things, like we're reviewing a policy once a year really is not, it does not that it takes a lot of time. It's just something that it's like, oh, I got to set time aside for that, but it's needed. And then other things too that other landlords can relate to as well is like even internet. Like sometimes I look at my internet bill, I'm like, how did this double? So I call the company and they're like, "Oh, we found a new promo for you. We can lower it even cheaper than you had before." And I'm like, great, I just saved $60 a month, which is basically making $700 a year. So there's a lot of these like once a year tasks that I need to actually do it. So this is a good reminder.
Yeah,
Funny.
it's one of those things, it's added to the list of things that need to get done, but it's important, it really is, especially when you own multiple properties. Again, insurance is one of those things. No one wants to have to deal with it, but I definitely recommend at least once a year. Give it some time.
For sure. Okay, so now I want to talk about the not so fun part of insurance, but the part that the reason why we all have insurance is for like the worst case scenarios. So if we can either walk through like an example scenario or kind of talk about what happens if it happens to your property and you need to tap and actually use the policy, like what does that actually look like?
Yeah, so we, God forbid something happens, you can either give us a call. We've got an amazing, claims department that will assist you, assign you an adjuster, and honestly hold your hand through that entire process. You can also do it online as well. So whatever your preference is, they'll set the expectation of what the next steps are going to look like, what steps need to be taken to assess the damage, rebuild, repair, and whatnot, and then go through the policy and let you know what your coverage limits are and what you can expect to receive within that time.
Got it. And how long does, I mean, again, every situation can be different, but like, and maybe, I don't know if that's communicated, whenever that stuff happens, there's an estimate, or if there's like a general, it takes 7 to 14 days to get like, what can somebody expect, I guess, as far as timeline?
We try to be as quick as possible. To be completely transparent with you, I don't know what the exact timeline is as to, how long that process will take. I really think it is a case by case basis. Also, depends if it's a natural disaster that happened and affected a whole area. I don't know the exact timeline. What I can promise you is we've got a really stellar claims team and they try to be as quick as possible.
For sure. For sure. Yeah, it's interesting because I know you guys focus on landlord policies, but with the whole claim side of it, one of the niches, I don't know if I might have mentioned this to you, but that I do and a lot of people do is we house people whose houses get damaged from fires, floods. Their
Really?
insurance company, essentially the people paying for them to rent our properties. Yeah, it's kind of, it's really a win-win all around because we're giving these people housing when their house got damaged. I actually have someone moving in tomorrow whose house got damaged. I don't know what happened to it, but got damaged. And again, I don't know anything about the homeowner's policies, but I know there's
Right.
something in there that lets them rent a property like mine. And it's always interesting because I always want the most rent, but I always think in the back of my head, the more rent I charge, the more that these policies are going to go up in price. Not that I'm single-handedly, affecting or moving the insurance market, but just
Right.
other people are doing this all over the country. So it's just an interesting thought.
Yeah, that is awesome. I love that.
Yeah, cool. So next thing I want to talk about, just touch on kind of as a bonus topic here, is umbrella policies. This is something that I don't have. I know the term umbrella policy, but I don't even really know much more than just the general idea. So if you can kind of touch on like first, what is an umbrella policy?
Yeah. So umbrella policies are strictly excess liability policies. Okay. So on topic of landlord insurance, okay, we'll use this. So let's say that on your underlying landlord policy, you carry 500,000 in liability coverage. And let's say that you get hit with a lawsuit for $800,000. Okay. Your primary policy or underlying policy, if you will, is going to pay out that first 500,000. The umbrella is going to kick in to exhaust the rest. So the umbrella, typically you've got a list of primary residents and then any other properties that you own. And then you've got the ability to do auto as well, just to make sure, if anyone did try to come after you or your assets, that's protected. So strictly excess liability.
Got it. Yeah, it's another thing that I need to. You can't tell on the laundry list of things I need to do, including actually doing my laundry. Well, I got a laundry list of things to do. I had my first liability kind of scare like now a week or two, and it's not necessarily resolved, but I think it is. I'll kind of share what happened. So I had this triplex, and I had this tenant on the bottom unit, and she messages me. This is so she booked through Airbnb, and I know Airbnb has their own some policy of sorts. So that's just another factor here. But guest messages me and says, "Hey, if I move out a month early, am I still liable for the rent?" Basically, was her question. And
Okay.
I kind of told her like, "Yeah, you can't tell me like I'm moving out tomorrow. Am I liable for the next month?"
Right.
Yeah. So I replied yes in a nice way, and then she said, "Okay, thanks." And like, and again, she replied in a nice way. Like 4 hours later, this is where she drops the bombshell. She goes, "Oh, I was just curious, by the way, because I tripped and fell, and I think I broke my arm." And I'm like, "Holy moly! Like this is crazy." So I asked her, oh, I said, "No, I'm so sorry to hear that, all that stuff." And then I asked her where she fell, like specifically, so that I
Mhm.
could take, if there's a tripping hazard, I want to take care of it
Of course.
regardless.
Yeah.
And when I asked her that question, she just gave me the property address. And I'm like, I'm like,
Where
that
of your
is like,
listing?
yeah, yes. And I'm like, obviously it happened. Like she told me it happened at the property. So I said, "Where did it happen?"
Okay.
And she just gives me my address. And I'm like, "That's where it happened. Like, you told me it happened at the house or the whatever, the unit." I'm
Right.
asking like where in or around the unit did it happen? So when she gave me my address, maybe that was overthinking it, but I was like, "Oh my God, like she's not going to tell me and she's just going to like just put all this blame on me and all this stuff." She ends up telling me that, oh no, so she didn't say anything, and I was like, "Oh boy." So then I had my handyman go over there for a separate issue, but I said, I'm like, "Does her arm look okay?" Or like, or can you like get any more details for me? Because I'm trying to ask her these questions. I don't want to like have too much out there.
Right.
Anyway, but my handyman was like, "Yes, like she definitely hurt her arm." So I was like, "Okay." I'm like, "Can you get any details as to like where this happened so I can address the issue?" So she tripped and fell on the curb of the street. So there's street parking, just to kind of give as much visual as I can. So there's street parking. There's about 3 feet, 3 to 5 feet of grass. Then there's a sidewalk, and then my property line begins. So she fell on the street curb, which technically isn't my property. Again, I'm gonna fix the issue.
It is a tough situation, especially I think that landlords want to be accommodating as much as possible and they want to, they never want to put anyone in a situation to, get hurt. But I'll tell you, it does happen. I've seen claims for it. I've seen, people get hurt on properties. And that's why you have, insurance. A big thing too is, it comes down to, are you found legally responsible, right? Were you negligent? Did you keep up with the property? Did you, were there concerns that were addressed or, mentioned to you that you put off? And then, so keep in mind too, there's a piece of that where you do have to be found, responsible. So take care of your stuff, try to prevent any hazards. I'm sure everyone does that, but yeah, that's the big thing and to remember is, that's why you have insurance for situations like that. Make sure you've got high enough coverage limits, but B, you do have to be found legally responsible. But on that note, umbrella policy premiums are relatively very inexpensive. I mean, we're talking a couple $100 a year most of the time is what I see. So it's worth it just to
Wow.
have, think of it as a Starbucks coffee, they're very inexpensive policies. So definitely recommend looking into that.
Yeah, that's good to know. And I'm sure, obviously, each policy is going to be probably catered towards how many properties, the value, what your other insurance looks like. I'm sure there's a lot of nuance with that. So probably to get into that with the umbrella policy carrier. Is that fair to say?
Yes. Yeah, so I'd say it's pretty standard across the board that umbrella policies will require you to maintain a minimum limit on property insurance of 300,000. So if you've got a policy that only carries 100,000 in liability, you would have to up that. If you did include your auto on an umbrella policies, there's liability requirements for the auto as well. And I'd say that's
Oh,
pretty standard across the board with any carrier I've ever worked with that does umbrella policies. The minimum coverage for underlying homeowners or landlord is $300,000.
Got it. That's actually pretty interesting to know.
Yeah.
So moving on from the umbrella and all the fun insurance and looking forward, what have you noticed? 2025 and 2024 has been an interesting year. What's happening all across the country, from natural disasters and not fun things like that. As far as insurance, though, how do you see like any changes in the insurance world as it's going to affect landlords, kind of moving forward, happening now or moving forward this year and next?
Wouldn't say, we've had a lot of wild weather this last year. I mean, even if we take a look at the California wildfires, that's been affecting the insurance industry for a while now. I mean, many, many years. I'd say that, unfortunately, it's not anything that we can really prepare for. The most common things we've seen this year are wildfires, California, Smoky Mountains, South Dakota, and then also those coastal areas. So, Houston, Texas, and Dallas, Texas is big right now, where it's really hard to get a policy that will include coverage for wind and hail. A lot of carriers are pulling out of, those markets for both the wildfire and the coastal areas. But things that ebb and flow, it could be, situate or temporary, I should say. And I mean, it could look different next year. But I'd say that's been the current challenge within the last year or two.
And then also to kind of a question with the future of, insurance rates and all. Obviously, the economy is kind of crazy right now. At least it is when we're recording this. So if there were a case where building costs, for example, shoot up, is that something that's going to have a pretty immediate impact on insurance rates?
Typically speaking, if we're talking about landlord or property insurance and you have a replacement cost policy, okay, then yes, right? If cost of building material and labor is going up, we have to adequately adjust the policy for what it's going to cost us to rebuild so that you're not underinsured. So I think just like anything, yeah, inflation, does have a big part of it, but, it doesn't always go up. I have seen policies go down. The software that we use to calculate the rebuild cost is extremely accurate. So it ebbs and flows, but yeah, inflation, does have an impact on things like that. If it's replacement cost, if you've got, an actual cash value policy that does include depreciation, then you're not really going to see an impact on that. But on the replacement cost side, you will.
Got it. Yeah, makes sense. Cool. Is there anything, I know we talked about a lot of different things in the insurance topic. Anything we missed on? Any big topics that you're itching on, or you think we pretty much hit it all?
I think I would just encourage anyone watching to, insurance is complex. It's not something that the verbiage is hard to understand. The contracts are long. However, it really is designed to protect you and, your investments. And so if you're ever unsure of what a coverage means, or, do you really need this? Or, reach out to your insurance agent. That is literally what we are here for, to make sure that everything is tailored to your needs. Make sure that you've got the right policy in place. There's no such thing as a dumb question. Ask and make sure that you're paying for something you're actually going to be able to use.
Totally. All right. Well, Lindsay, thank you so much for coming on and sharing all this knowledge on insurance. For those of you listening, if you want to check out Steadily, you can go to steadily.com. If you're really feeling like giving me some love, though, you can use my affiliate link in the description below. But nonetheless, like I said before, Steadily is the company that I use for all my properties. So I'm not just, promoting them for no reason. I do use them. I really do enjoy them. So yeah, thanks again, Lindsay. Thanks again, Steadily, and see you guys later.
Thanks, Bailey.
Thanks for tuning in to Built for This. If this episode hits home, send it to a friend, post it on your story, or tag me. I'd love to hear what stuck with you. This show is all about building real wealth, real health, and a life that actually means something. I'll catch you in the next one, and remember, you're built for this.